Hello, hello, hello. Happy Tuesday, everyone. How is everyone doing? Already off to a strong start this morning for Turnaround Tuesday. Good morning, Davey. Good morning, Anissa. Good morning, Patrick. Hello, Ted. Good morning, Legion Reaver. Hello, Rich. We'll take a look at that. Hello, George. All right. We've already had Evans speaking this morning. Yay. Stressing, one of the things 100 to 125 basis points only expected this year. And we have three meetings left, so that would roughly be 50, 25, 25. So just real quick, we have the odds dropping on that 75 just slightly. Today we had durable goods. The headline number coming in slightly better than forecast. X transports coming in as forecast. We also had Redbook coming in better than previous. House price index just came out a couple minutes ago, finally starting to drop. So you get the house prices overall on the macro perspective starting to drop, but still up 16% year over year. We got Bullard speaking, yay, in 50 minutes. Do not ignore 9 a.m. Central Consumer Confidence. Do not ignore that, especially if it is a miss. So I would definitely be prepared for some potential, especially since we're trying to put in a short-term bottom. So do not ignore that. If it's a beat, it'll probably just fuel a continued rally. Though if it's a miss, it might put short-term brakes on this this little rally so far off the lows. I'm going to be watching the Richmond Fed manufacturing and services just to see the amount of contraction, or if they do pop below above zero again for expansion. Dallas Fed Services is going to be keeping an eye on that at 9:30 Central, and then the only other thing then we have this evening is Fed's daily speaking. See, pretty much green across the board. So we're getting the final bounce rally after the lows held in the S&P. From the June lows have held in the S&P and NASDAQ, and the Dow never closed below them. I already talked about this. FOMC only 63% for that 75. We are still in negative gamma territory, so as this rallies potentially up, you can have dealer hedging, which is forced to buy into the rally, so that can amplify it. Again, it can also amplify if we do turn around back down. Fear and Greed Index at 17, where we watch for the short-term bottoms, which looks like what we're getting now. Good morning, Options 22. All right, got that out of the way. Earnings this morning, nothing major after the close. I guess if you're still in the earlier 2000s, you're watching BlackBerry. That's about it. This is just a very quiet week, although we will have the certain meme people watching Thursday with Bed Bath and Beyond. Mike Run will be interested in Nike after the close, actually on Thursday. So let's get to it. Josh, good morning. All right. Remember, we have the daily buy on the close above the high. We do have this sloppy double bottom on the 4-hour. You see we've already tapped the other end of the rotation zone and testing that high area, but not confirmed yet. So a move above 37, 30, 50 confirms it. A close above that triggers it into a clear path move. Other thing I'm watching for, besides that, for a continued little bullish case, I will be using the retracement area. So you see the first target on that is roughly the 50%. So I'd actually bump down the first target just a hair at that 50%. That's where I use multiple information to fine tune key levels. So the first area, if this rally does continue, especially if we trigger a daily pattern or this mini double bottom, my key areas between the 50 and the 62.5 on the last swing down. The last swing down, this swing, not this swing or this swing yet. If we get a close above the 62.5, not only will it give me another target, but I will go to the next swing. Why will I go to the next swing? Because then I can fine tune my areas. If we get above the 62.5 on a closing base on the next swing, then I go all the way back to the prior swing. That's how I cascade them up, which is also very useful for trailing stops. So you remember, use targets for partial profits and or trailing stops. Now, there is a potential double top on the S&P, NASDAQ going into the open. It would be confirmed on a trade below 36.95. It will be triggered on a closing basis. I am not looking for at least a 5-minute close on that. It'd have to be a more substantial close, and that would be another retest of the lows. If that were to trigger and retest the lows, then we'd have a triple bottom even on the 4-hour, and that would wipe out the potential double bottom. So do keep that in mind with your trading plan for today. Also, daily cycles finally starting to turn up. Again, looking at the daily chart with this potential double bottom, I already went through the shorter term levels and the double targets, but that would take us back to the daily rotation zone. And anywhere in this daily rotation zone, we start looking to fine tune topping areas. You don't just sell because it could, again, keep going. The NASDAQ, pretty much the same. We had this little mini I talked about yesterday after the market closed, which is done. So that was pretty interesting within that channel pattern. That was a very nice, you had to take advantage of it during the Asian and European sessions, but that transpired nicely. I'm looking at the conservative targets for this potential double in the NASDAQ, confirmed on a trade below 11,414.50. Triggered on a close below that, the full target 11,317, the minor targets 11,342, 11,366. And that just takes it to the reversal move, not even to the key lows in here. There is not a 4-hour double bottom pattern here on the NASDAQ. If we do start breaking above about 11,530, I'm watching for the upper end of the channel and this other key level at 11,603. And then remember, use your retracement harmonics. The next major area, but here's the first area I just talked about. The next key area I'd be watching is the 50% retracement, 11,682, which is also converging, 11,684 roughly, 11 somewhere in there. Converging with the 50 on the 4-hour and this prior little top. And then the really key level, if the rally does continue, roughly 11,800, 11,797, you get a close above there, then we'd start watching for the continuation rally. Hope this makes sense. Also, return to the rotation zone. So that is going to be key with cycles turning up. Also, I did not cover it on the S&P, but we got weekly cycles trying to turn up. NASDAQ also trying to form a short-term base against that 200. Dow, not a lot of great patterns in the Dow, but if you're watching for a little breakout level, the better trading from my perspective right now is going to be in the S&P and NASDAQ. Don't ignore junk in this. And by junk, I mean like the art crap and other stuff else, because that seems to still be getting juiced during these rallies, and it's getting juiced by Wall Street. Break above about 29,750, 30,102. There's little mini double 2 also on the Dow, and you'd use the conservative targets, and if it triggered and reached, it would pretty much be a retest of the lows. Is this technically a horribly formed double, but these test out okay with lower probabilities? The probabilities aren't as strong as the well-formed one, and you'd see that would be a move back up into the clear path and virtually taking down the breakdown zone. So you can use those targets. I think I talked about it. It's not just, it's like all three pipelines are damaged simultaneously as major significant damage to 1 and 2. I think I was like, that's good. I bet you that's going to happen. And it happened. And I bet you the repairs are going to take some time. And then they'll probably discover other it's, you know what? Shocking. And it's on the deep sea portion. I wonder who has attacked. It's not like some random environmentalist went down to the deep sea portion and just punched a hole in it. I wonder who did that. It's cold here in Kentucky. Can't imagine what it's like in Germany. It's gonna be a brutal winter, I think, and it's cold here. I was walking the dogs at 6:05 this morning, and it was 45 degrees already, chilly. Ugh, I do not like cold weather. I am having an okay day so far. Will not complain. By the way, Dow also cycles at the bottom. Everything's trading the same. We'll get to some other stuff in a second. Russell, for the point of completeness, little mini double came to complete just like the NASDAQ last night. Yes, there I would use the conservative targets again just because we're trying to put in a bottoming pattern, and this would just reverse the move to the downside. Give a little more room from my perspective on the Russell. 1696 to about 1700 for the breakout play. You can do your harmonics on there. By the way, this does qualify also for a double. So those targets can be used to the upside into a pretty much an advanced clear path and a return into the daily rotation zone. Let's get to real quick with the DAX. There's no strong bottoming pattern. Remember, the DAX did close below its July's lows. There was still an aggressive buy I will be watching for on a close above yesterday's high, but so far not in play. You only have a horizontal channel breakout, so the area I will be watching is about 12,400 into this clear path move, and then watching for the breakdown area. There you go. Other than that, it would be trading within a channel. Now the notes. Did somebody put up something in here? Potential inverse head and shoulder building on Z and 1 on the 1 hour. Confirmed double top and US 2-year yields on the 1 hour. It's really early, and this is not much of a bounce. So I wouldn't be watching this necessarily yet. It's a horribly slow, especially if this dips down a bunch more. It's going to be off the table with the head and shoulders. So I'd be real careful about an early head and shoulders on this. There's not a lot of great areas to trade into. I said I was looking like a capitulation bottom forming yesterday, and that would be for a short-term bounce. There's just not a lot of great trading to the long side yet in the notes. Any more aggressive short-term plays will be a return to the daily rotation zone. I don't really like anything on a play just yet in there. There's no strong patterns. Looking at the 2-year yield, I mean, this was also a rip your face off move. Very overextended. Very overextended. And yes, this is, you'll want to use conservative targets. But yes, it's confirmed but not yet triggered. And that would be potentially a return to about 4.07%. I'm just looking to see how that plays out. And a return to You're into a clear path move to the upside, and that would essentially return it to the daily rotation zone. So that is an aggressive short play. You have cycles at the top. So I would not ignore, especially that first target with lowering stops. Because this is a minor target, not a more significant topping pattern would be on a daily. This is a 1 on 4 hour pattern, and you see at least the 4 hour rotation zone will be out of the way. And it's got room to play to the daily. So those, because this, by the time this triggers, I'd watch for that 4 hour to be out of the way. So this could easily return to that 50 area and the daily rotation zone. Some little teaching stuff there. Crude, no strong pattern just yet. There's still the aggressive buy above yesterday's high, but it's tight with reward to risk. Now remember, when I list out aggressive buys, you can have something trigger, but it could not be tradable. And anything against a rotation zone on the daily and weekly is aggressive. So, for example, yes, you would have a buy here, but look how tight the first target is with the daily rotation zone. So just because something is buyable does not mean it's playable. Does that make sense? You have to put those into context. Because I can get things like doubles that triggered that, reward to risk was just it was never playable. It was never tradable. Not much going on with natty gas still in the long-term sell. Euro, trying to pause in here. There's just not a great play yet in the euro. This does qualify. So you'd need this to trigger, and I would use conservative targets if you're trying to play this double in the euro. At least I'd need a 4 hour close above there, and that would be a return only to the daily rotation zone, not even to the other breakdown zone, and not even to the 50. I mean, not even to the 37.5. So that would be an aggressive trade on the euro to the long side. Funny there, a little intervention on the yen. Look, they intervened here. Intervention didn't even last. By the way, the first time interventions rarely work. It's going to take multiple, but that's going to get very interesting with their 10-year bond market. Bitcoin, you had Powell talking about further regulation, but Bitcoin looks like it's going to trigger this little mini corrective double bottom. 21,644. No, this is not a long-term buy. It's just a corrective bounce pattern, especially if the NASDAQ gains momentum to the upside. Remember, weekly, your rotation zone, it can rotate back in here. Now, could it be forming a little potential bigger double bottom? Yes, we'll take a look at that at some other point, not today. Tesla above 284.50, watching for the gap fill. And then 289.77, 295.77, especially if we have stupid risk on rally. That will be another asset that people rush into. Again, can't get more substantially bearish until I get a daily close below 265.73, especially with Magic Robot Day coming up. Stupid Magic Robot, going to be a remote controlled day. But people will be fooled. Spiders, again, you have the gap up, so if we got bad numbers coming out or we have any weakness, I will be watching for those potential doubles to trigger on the S&P and NASDAQ. Those are the double tops. Then I will, if those double tops trigger, then I will be watching for the gap fill in the spiders. The bullish play, if nothing triggers on those S&P and NASDAQ double tops, and those are not 1 hour double tops, if we continue to rally, even after that 9 a.m., 370.21 on a 1 hour closing basis triggers the double. The first target is just in front of the breakdown zone. 370, 370. Then you got 375.40, 377.13. So that's the bullish play to the upside. Besides the gap fill play, and then the major support would come in about 365.45. the levels are virtually the same from yesterday to the downside. You can also use your reverse harmonics from this high to this low for short-term levels, but the major level, if this does not hold, would be 359.74. Remember, I talked yesterday about we are still in. Should something happen, we are still in crappy market internals and not a lot of market depth. So if we roll over and break these lows, we could still potentially see the capitulation move. Not counting on it yet unless we do break the lows. Same thing in the NASDAQ. I would be using the conservative targets. You have a little bit of a gap fill left behind. The key level you're watching a trade above, 279.49, confirms this little double. Again, conservative targets. A 1 hour close above that level triggers it. Your first little areas for the gap fill. So you can always use that for a little micro ratchet up at 280.07, especially if anything triggers it's bearish. But your key levels 282.45. You do have another gap fill up here, 283.44, 283.93. So that would be my next target profit area, and then 285.41, right around the area of the significant breakdown zone. Just lowering that a hair. And that's into the 4 hour rotation zone. If we do roll over and break the lows, 270.16 and then 267.21. There's your key plays for all those things. Oh boy. At some point, I think that's a way off in the DAX for a lifetime buying opportunity. I don't think that's going to transpire in the next couple weeks. You are welcome, Chris. Again, thank you for being here, everyone. What does my gut say? My gut still says we should be putting in at least a short-term bounce. I am treating it with a little caution. We do have bullish things. We do have bullish setups. We do have some things, it's just in this area we should be putting in. There's a lot of things. Why I still list out the capitulation, because if this bounce does not hold, my bet would be it's not going to be an orderly decline. We will probably get the flush out move then. All right. No, not 380 today. That would actually be an absurd rally. Hey, we're in rally mode, but that would be an absurd rally. From yesterday's close to 380. I mean, yeah, it'd be a 5% rally. I'd be watching more so to 378 on a real key rally, but I don't think we'd eke out more than about 373. Gary's looking to buy Apple. We're going into the open, so I'll have to look at some of this stuff. Yeah, you can play the mega caps too. So, yeah, there's going to be a roll through buy on here, but do not ignore 156.32 on an intraday trade for Apple should we be strong. Good morning, Rams of Fall. You're welcome, Anissa. Any significant pattern in DXY? Let me go to the dollar index first. The dollar index, I'm just doing, I don't like trading the DXY, but a lot of people need to follow it. We hit the first target on this double bottom. The only thing that I'm watching for is the breakdown on the dollar index, 112.91, to trigger the double top and the bigger pullback. Other than this, we still favor probability-wise and retest of this high areas for that. But the key reversal thing I'm watching is that double top to trigger. If we get another push up, it would turn into a triple top, and then those targets would be done. Good morning, Lauren. No, there wasn't much of a Tom show today. You're welcome, Gary. So that's what I'm watching on the dollar index. So I just transfer it to DXY. You have the double on the DXY. I'd be using the conservative targets, though, for anything. Why? Because that's a return to the breakdown zone into this area. And you're trading against the rotation zone, and that just takes you into the daily rotation zone. But that is not triggered yet. So that's the bearish pattern. The bullish pattern already triggered. And hit the first target. There you go. That's where we sit. Going into the open. I just got to peek over there real quickly now. So remember, the only major thing is this double. By the way, you do have this micro double in there too to watch if you're trying to do anything aggressive to the bullish side off the open. That is a valid mini double still. So that would be a front run pattern potentially, and then going into the other more substantial pattern. Other than that, the bearish play is below 36.95 in the S&P. Now this push is much lower. That mini double is going to be off the table. That's where we sit. I shall talk to everyone. We'll look at Nat Gas this afternoon, Rich, again. I'll talk to everyone later. Bye for now.